Welcome to HYCM Insight with myself, Giles Coughlin. Now, the market mood for the session ahead is as follows. The Bank of Japan stands alone among the world's central banks. As other central banks are looking like hiking rates, the Bank of Japan is still using yield curve control on its 10-year bond. The Bank of Japan is signalling that it does not want to hike rates. Now, this has resulted in significant yen weakness over the last few weeks, and that is set to stay, as the Bank of Japan said last week that it had no concern about the yen weakness and that it was in line with the fundamentals. Please note that a weak yen is good news for Japan's export-driven economy, as their goods are now cheaper for other countries to buy. So, with the medium-term outlook for the New Zealand dollar Japanese yen set to be tilted to the upside as market conditions currently stand, it is worth looking at the strong seasonals for the New Zealand dollar Japanese yen pair. Over the last 10 years, the New Zealand dollar Japanese pair has risen 80% of the time between November the 1st and December the 30th, had an average return of 3.86%, and the largest gain was here in 2016 with a pretty impressive 8.52% rise. Largest loss in 2011, where it registered a minus 3.84% loss. Now, major trade risks. If there's any significant breakout of COVID-19 global cases or risk-off trading, that can see yen strength. Also, if the Bank of Japan change their current monetary policy stance, that could obviously impact the outlook for this trade. However, just looking at the New Zealand dollar Japanese yen pair, notice that the obvious technical area to potentially rejoin this upside bias would be any retracements back down to this 80-20 region. You can just see this near-term resistance now turns support. So a move down to 80-20, you'd expect to find a medium-term buyers entering really from that level. Pretty hard to get into this right at these highs, but a deeper retracement some point during the next month could be suitable for a medium-term buying opportunity.